Shares of Bajaj Finance rise over 2% as the company's second business quarter update reflects strong AUM growth of over 23%. New loan bookings as well rise 25% to around 12 million.
Nykaa moves up after growth momentum accelerates in Q2, driven by fashion and beauty segments, both of which see revenue growth of over 20%.
Avenue Supermarts slips around 3% as the company's second quarter business update disappoints. Brokerages Goldman Sachs also bearish with a sell rating a target of 3370 amidst weaker than expected sales growth.
Aditya Birla Lifestyle surges after a block deal sees nearly 6% equity change hands. Sources tell CNBC-TV18 that Flipkart Investments is likely to have sold the stake.
The Supreme Court will hear out the Vodafone Idea plea seeking relief on AGR dues later today. The stock trades with cuts of about 5% ahead of the hearing.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and the markets are continuing the form that we saw last week itself. So the Nifty is up more than 80 points, almost at around the 20 DMA mark. The Nifty Bank up more than 300 points. It's crossed the 100 DMA. So it's a good-looking screen, Mangalam. It's a good start to the week. The bulls will want to drive on the advantage from here on.
We take that point entirely, Nigel. You know, staying above that 25,000 mark will be extremely crucial from a short covering standpoint as well. The markets are going from strength to strength. After opening mildly in the green, there was a slight dip. The dip was vociferously bought into and currently at the high point of trade for all the frontline indices. But around all of this, we do have a new listing. We have Pace Digitech. The shares listed at about a 2% premium to its issue price. Currently holding around, flattish, as close to the issue price as possible for that stock as well. Closer to 220 was the issue price, around 219. We have Mr. Rao Madhisetti, who's the chairman and managing director of the company, now joining in. Thanks a lot, Mr. Madhisetti, for joining in and explaining, congratulate you on the listing that has taken place. We understand your business a little bit from the red herring prospectus. What we really want to know is that this over 800 crore issue that you have, 600 crores will actually be deployed towards your energy segment. What will actually be the return on the capital that you invest in this business? What are the kind of asset turns that we're expecting? And how big do you expect this battery energy business to be over the next 3 to 5 years?
Thank you very much. And the IPO proceeds, will be using it for the battery energy storage system project that is underway in MSCDC, that's Maharashtra. We have about 1,500 megawatt hour battery energy storage system plants that are to be deployed in the next 15 months. And we are working already on that. And this project will be giving us about 14% of IRR on the equity. And we do have the further backward integration in terms of project execution as well as the products that are going from our own factories. So put together, the IRR is going to be much better than the industry standards.
And what kind of revenue can you make from this?
Energy storage system. Yeah. It's an annuity model for 12 years, and the annual revenue is about 238 crores. It's a fixed fees model for 12 years. We'll be getting that much revenue. And also this energy storage system, which is actually it just started. I would say it's an emerging sector. It is coupled with the renewable energy to store it, whenever there is renewable energy in excess during the generating hours. And then we give it back to the grid during the other peak hours, probably in the evenings where the generation is not there. So that is the new business that we have diversified into, and we have a factory built in Bangalore, and that is producing 5 gigawatt hour battery systems.
Okay, all right. Hi, sir. Good to have you on the show, and congratulations on the listing. A quick couple of questions. So bulk of it, you're saying they're going to be using it for this BESS project with the Maharashtra government. So we've got that out of the way. You also reduced part of this 800 crores odd to reduce debt. So could you tell us what is the updated debt number?
Out of this IPO proceeds, 630 crores will be using it for this project. Yes. And then the balance is for the general corporate expenditure.
Okay.
There's no debt,
no debt.
much debt except some, we have some CC limit.
Okay.
There's no debt on that. So
All
this
right.
is majorly for the project and then for the general corporate expenditure.
All right, sir. A couple of queries then. FY24 was blockbuster, while FY25 was more or less subdued. The numbers seem to be a little lopsided. So on a steady state basis, what kind of revenue growth could you guide the street for, if you could help us out with that? And since bulk of your revenues are actually coming in from governments, what about your receivable days, your working capital days as well? Where do you see that number stabilizing at?
Yeah. Yes, FY24 was kind of, the major growth came from the previous year. FY23, we were about 500 plus crores. And we had jumped from 500 odd crores to 2,400 odd crores. And then we had stabilized at, the same figure around that in FY25. FY24, the major supplies have been completed as per the contract, so the numbers were shot up majorly. Whereas the FY25, it's more of the execution. So the execution, as you know, it takes time. So the numbers were, we could not grow beyond that because the earlier year was for majorly for supplies, and the FY25 was more of execution billing. So that is why it was little, flatter. But we do have the project coming to end and other projects are in. Now this year FY26 would be better than FY25. But
How
you
much,
also have to
how much better, sir? What growth?
500 crores to... Yeah, we are seeing a better growth and we would be, I think we will be announcing our the H1 results also soon. So it would be better.
Right. If you could give us a sense on two things, how much better it will be, because FY24, FY25 was around the 2,400 crore mark. Do you see a jump towards 2,800 crore or closer to 3,000 crores? That's point number one. And secondly, you said that FY24 was strong because of a big order that you won in FY23, and over the next couple of years, you had to supply on that order itself. Now that order is nearing completion, do you anticipate any other order wins as well? So what's your order book in hand right now? What is your expected order inflow?
Yeah, we have about 7,000 odd crores order book in hand coming from both telecom business, that's ongoing business, as well as the new business that we have entered into, the battery energy storage system. Both put together, we have about 7,000 plus crores, and which will be executed over the next 18 months to 24 months. So we would see a strong balance sheet getting built over the next 2-3 years. And as we know, the most of our FY25 balance sheet was constituted by the telecom business, but in this year of FY26, there will be some recognized numbers would be coming from the energy sector. But FY27, we are hoping to have about 50% of the revenues coming from the energy sector. That's a new sector. Okay. And thereafter, it would be even stronger. That's what we are anticipating.
Sir, your numbers are looking pretty good. You have a good amount of order book as well. The key concern I think the street will have is the dependence on government tenders and government orders, since currently it's more than 90%. And if I got that number correct, I think your working capital days is around 150 days. Are you comfortable at these level in terms of working capital days? Because cash conversion is going to be most important, and the street will track that very closely. So please comment on this.
Absolutely. Yes, see, in a large project, what happens is there are milestones for the payments. Though we do the invoicing as per the standard tender conditions, whereas our contract conditions, that payments would come in only when there is a, that particular milestone has been hit. So what happens is that we raise the invoices for the contract obligations, but some of the, we will not be able to get the entire money against that invoice, whereas that will be coming in the future course. Whereas it's a cycle, like, we keep getting the payments, and then similarly the project billing will be happening. Coming to the working capital, we have done this 2,500 odd crores in the last 2 years without much working capital requirement. These projects are funded well. Point number one. The point number two is that it also comes with the mobilization advances. So with a small debt about 140 crores, which is the CC limit we have, and we don't have, other than that, we don't have any other, the debts on the books. So with that, we are able to handle such a large business. So that itself is the testimony that these payments are in line and they are expected as per the milestones, and we are able to manage our business with that.
All right, just a final question before we let you go. You said that, in 3 years from now, by FY 27-28, you will have 50% of your revenues coming in from energy, which currently is about 6% of your business. You have orders worth 7,000 crores in your hands, executable over the next 18 months, which implies that, you would do at least 3,000 crores in FY 26, with the remaining happening in FY 27 itself, because you have to execute the order books that you have in your hand. What kind of margins are you likely to do over the next couple of years? Because margins have seen a big jump. Last year, they were closer to 20%. Do you think this is a level that it will sustain over the next few years, or it can go higher from here?
We'll be sustaining that for the simple reason that we have the backward integration of our businesses, like, whether it's telecom or the energy, we have our own products. So that helps us in executing the projects in a better way in terms of profits and the performance. So we do see that the profits are going to be either maintained or improved further. So we see that particularly this energy storage, which is a new and emerging sector, and we are the front runners in this. So we do hope that our the top line as well as the profits are sustainable.
All right, take that point. Thank you, Mr. Venugopal Rao Madisetti, for joining in and giving us a detailed outlook on what your business is likely to look like over the next 3 to 4 years. Wish you good luck for this diversification, order execution, margin expansion and backward integration as well. But for today, celebrate the listing. Pace Digitech is up around 0.5%. Meanwhile, we'll take a short break, come back, get you more on the markets and stock-specific action on the other side. Stay with us.
Welcome back. Well, let's focus on the bottom of your screen. The government is weighing the resolution of Vodafone dues to bolster the UK ties. That's the news that's coming in from Bloomberg. The government is considering a one-time settlement. So that explains why the stock has seen a big recovery from the low point of the day. So that's the information we are getting from Bloomberg itself. The government weighs resolution of Vodafone dues to bolster the UK ties. So that's and they're considering a one-time settlement. We wait by it for further clarity, but for the time being, this is the information that's coming in on the Bloomberg wires. So we'll try to get some further clarity on this front. On that note, let's welcome Shivangi Sarda from Motilal Oswal Financial Services for a technical check. Hi, Shivangi. Good to have you on the show. What's your view? Markets have seen a good bounce.
About the markets, we've seen a relief rally and an excellent, momentum that has continued in the October series. We're recommending a buy on decline on both the indices. Of course, Bank Nifty is outperforming, but Nifty is no less. We are, touching the psychological 25K marks in the index. We're looking at 25,200 on the upside with a support of 24,850 levels for Nifty. Talking about Bank Nifty, we are, of course, now accompanied by the rally in the private banking space as well, earlier, which was started by the PSU space. We have surpassed the previous, hurdle levels, and we're looking at 56,500 as the next marks for Bank Nifty with a support of 55,850 levels as a support.
All right, we take that point. Thank you for that. Shivangi, individual stocks, what do you have on your list? Because we are seeing some big moves on a few names which have news backing them. Fortis Healthcare, for instance, up now 6%. We're seeing good traction on Nykaa as well. A good update coming in the second quarter, up 4%. Angel One too has moved to the high point of trade. Any of these make your list of trades? What are the others that you're recommending today?
So talking about stock-specific action on my radar, first up is Hindustan Copper. We've seen excellent amount of action in the metal pack, and Hindustan Copper has been one stock which has been resilient from the last 5 weeks. So recommending a buy here on Hindustan Copper. Now, of course, we've seen that the entire metal pack has been shining, and ahead of the festivities, we are recommending a good action to continue over here. So target would be 350 for this one with a support of 333 levels. And the second pick on my radar is the second pillar.
Sorry, go ahead. Go ahead, Shivangi.
Bajaj Finance is on my radar next up, and we have seen that a good short covering move can be seen here. So this one would be on radar for the next targets of around 1,050 with a support of 990 levels.
Okay, all right, Shivangi, thanks a lot for joining in. Wishing you a good day ahead. Well, it's time to slip into a break. Come back. We'll continue our focus on the markets and individual stocks. Vodafone Idea, by the way, has recovered from the low point of the day. We'll wait by it, though, to hear the outcome of the hearing that's scheduled in the next 1 hour or so. Stay with us.
Welcome back. The stock on our radar is Sammaan Capital, down around 5.5% right now. It's nearly down 10% from its pre-deal high of close to 170 rupees. So continues to see some selling and profit booking post the deal that was announced, where IHC would invest about $1 billion in the company at around 140 rupees per share. The stock seeing a sharp knock from levels of 170, to which it had run up ahead of the fundraising board meeting. But let's get you some more ideas for profit coming in from our colleagues at Money Control Pro. Today we have Anubhav Sahu joining with the stock. Anubhav.
We'll talk to you about HEG, which can be key beneficiary of anti-involution policy of China. So in last 5 years, China's domestic steel demand has come down by about 10%. Excess production was diverted to exports, which as per our estimate is about 13.5% of global production ex of China. Now, high supplies in the rest of the world impacted steel prices, and which in turn impacted the profitability of leading steel companies. Now, China has announced plans to cut steel production by 50 million tons. This, if implemented by itself, can reduce exports by 40%. Now, low steel exports from China directly benefits graphite electrode industry, as it means more revenues for electric arc furnace production, which requires graphite electrodes. Secondly, about 100 million tons of electric arc furnace capacities are under construction or getting commissioned. Now, this translates into additional graphite electrode demand, which equals 25% of current global capacity ex of China. Thirdly, strong demand for the electric arc furnace transformers in India can be seen as a key leading indicator for graphite electrode demand in India. Finally, potential upcycling US steel manufacturing augurs well for company's stake in its US-based peer GrafTech. Now, among the risks to watch is a global slowdown. That said, valuations are reasonable and investors can opt for staggered accumulation.
Anubhav, thank you so much for that. We're 10 points away from the 25,000 mark on the Nifty, all 4 indices in bright green. So with that, we'll wrap up on this edition of Chartbusters. Thank you so much for watching. The team of Trading Hour comes up next.